In today's video, we're going to be discussing how to protect our Yieldmax positions. As you know, we've been reloading in our Yieldmax funds since tech had its dip from the recent highs, but even though they've pulled back to attractive levels, some of these Yieldmax funds, they're still way off of the recent lows that we had in 2022. So let's explore different ways to hedge these Yieldmax funds. As you know, we earn over $100,000 per year in dividends at this channel. And if we go to our performance and value, you'll see that we're up still for the year 47%. So the S&P is up 16, the Nasdaq's up 32, and the Dow's up 5. So we're beating all the indexes on a year-to-date basis, and on a daily basis, we're up 0.10%, whereas the indexes were down almost 1% across the board. Nasdaq was down 1.1. Okay, the Dow was down 0.5, and the S&P was down 0.7. So we're beating all the indexes on both a year-to-date basis and on a daily basis, even with all these Yieldmax funds. Okay, and that's due to our unique strategy that we have at this channel. If you need help living financially free out of your brokerage account, email me for my e-guides at akintodd48@gmail.com. So at this channel, we use a little bit of margin to get ahead. That's one of the big themes of this channel and living financially free. I mean, most great ones that I know have had to use a little bit of debt to get ahead. So I use this margin power that's granted in every brokerage account. So everyone can do this, not just me. You can do this too. For every $1 you put in your account, you get $4 of purchasing power. So I just use a fraction of this number to get the extra performance that you're seeing, up 47% for the year, and those dividends, which those dividends have grown now because obviously we bought some more Yieldmax funds today, which I'll get into, and then we're going to then discuss how to protect these positions that we're buying in Yieldmax. So my debt has creeped up to $240,000 now roughly because, again, I was adding to things today like APLY and OARC even. I added some to that. So as our debt rises, I'm not worried because we're still at $240,000 in debt, and my estimated income of over $100,000 per year in dividends will pay back that debt in less than 3 years. Okay, so this 140 in income that you see approximately here, and that's going to grow as these AMZY dividends come in and GOOY dividends and Facebook. Nvidia, not Nvidia, but Netflix. So when all these dividends kick in, this number will be much higher. So that will easily pay back the debt that I've racked up over the last couple of days. My debt was at about 220 a couple of days ago, and now I've gotten it up to 240. All right, but this debt doesn't show up on a credit check, and I can click sell at any time, and it's gone. So I don't mind having this debt on anyway because my cushion is still so large. Okay, my $207,000 for withdrawal. This is the only number I'm concerned with, and that number has stayed high because I've been closing my puts lately, which I've been updating on Discord. If you go to my trading recap section on Discord, you'll see that I've been here's where yesterday where I closed out some puts for $1,000 gain. I didn't really want to make a video about it because there wasn't a title to be had for some of these moves that I make. So I just share them on Discord. So that's how I raised a bunch of my available withdrawal. And by the way, if you need help understanding margin and how I use it to live financially free out of my brokerage account, email me for my margin e-guide at akintodd48@gmail.com. So Apple, here we are at the charts for APLY, and honestly, we need to go to an Apple chart because I just want to show you real fast. We just did a video on Apple, and I just want to show you that this stock has come down to the 100-day moving average. Okay, this blue line, this 100-day moving average, it blew past the purple line, the 50, and now it's at the 100. So I'm not going to be shorting Apple because it's such a large part of the indexes. As I've been showing you guys on previous videos, Apple is one of the largest holdings, if not the largest holding of the Nasdaq and the S&P. So I'm not going to be shorting Apple. It's very conservative. Okay, so that's the first Yieldmax fund that we're going to cover today. If we get a pullback to the 200-day moving average or 160, this orange line or 160, either of those numbers, I'm going to be buying more Apple hand over fist because the key with these Yieldmax funds is to match them in with the allocations that they are in the indexes, which, again, if you need help with, go see our past videos. But Apple, see, I have 20,000 in Apple roughly, and in my account, if you want 10% of Apple to match the index, because that's what it is approximately in the indexes, if you want, let's say 10% Apple, then on my account, 500,000, okay, 10% would be 50 grand. So I'm still way underweight Apple, and I'm not shorting that because it is the index virtually, in my opinion, okay? If we can, I don't know, I think I have it here. Apple, does it show the weighting here? Yeah, 11%, okay? So, and this is the QQQ. So, and then I think we have even the S&P here for Apple, and that's 7% for the S&P. So between 7 and 12%. So I average that out for about 10%. Okay, 11% there and 7% for the S&P. So let's just call it 10%. That I always want to fall in the middle. I like to stay in the middle of the S&P and Nasdaq. So Apple, I'm not shorting with a hedge. You could buy AppD, AAPD, but I don't think I need the short for Apple there. But where I did explore short today, OARC, by the way, 30,000 I have in this, and I have OARC, I have a SARK short, okay, SARK. So I have this SARK short as some recourse from OARC if that were to fall. But I like how OARC performed today. It was down 2.72, and if you go look at what ARK did, it was down about the same. So ARKK, let's go look at that, and you'll see it was down 3.6. So OARC actually outperformed ARKK today, which is very nice to see. And on a chart of ARKK, you're going to see that it's actually come down to the 200 now. See this orange line? And now it tagged the 200. So we were buying at the 50 there, the purple line the other day, and now we're buying more at the 200. So I added to that today. And my short is there in case that breaks, but we could be seeing a relief bounce here in OARC and the rest of tech soon, just by the way these charts are lining up. So one short that I definitely added to today was Nvidia's short, okay? Nvidia is still way above the high, way off the lows in my opinion. So Nvidia, I have about 10,000 in this, and I want to protect myself in Nvidia because it's more volatile than an Apple. Okay, so I bought NVDS, okay? NVDS. Now, you can see here NVDS. I have 700 in it. These are like ×2 or let me see, they're like double ETFs. What are they? It says 1.25 times Nvidia. So you're going to get a little bit extra movement on this leveraged short. So I have this much. I have the NVDA short, okay? And that's only because my Yieldmax position has kind of ballooned. I've been buying so many Yieldmax positions lately and growing them that I want to start protecting myself, because tech could have another leg lower here. We don't know. But if you look at a chart of Nvidia, it's pulled back to the 50 now, okay? Now, that looks like a perfect buying opportunity, the 50-day moving average, and the RSI has come down to almost 40. But you could see a break of this, just like you saw on Apple and even OARC. You could see a break of that. So I wanted to start my short in Nvidia, okay? So I bought that $700 short, and if we pull back to the $300 or the $400 area even, I might look at taking off the short. But look at how much Nvidia has run up. I mean, this has been a huge run. I still support it. I still believe you need to be invested in it because it's the index. So I like to go however the index goes. I don't care as long as I follow the indexes. But look, it's still, I mean, look, it had from 100 to 200 and then 200 to 400 in less than a year. So you're up 200% in less than a year. So to me, that's a little worrisome. And so I have a little hedge there for some recourse. Now I should explore a hedge on TSLY as well because I have 10,000 in it. And I don't have the TSLS short on yet, I don't believe. No, oh, yes, I do. I'm sorry. I did put that on today as well. So I have some recourse for TSLS. That stock broke the 50. If we go into Tesla's chart, you'll see that it broke the 50, and it could hang around. It could hang around kind of like, well, you see Nvidia is right on the 50. Tesla, let me show you. I can only explain if I show you. So you see here, if we zoom in this chart, you'll see on a 1-year chart for Tesla, we broke that purple line, okay? We broke the purple line, but it's trying to hang in there and hold it at 250. But I'm looking for a pullback to the orange line or, about 225 before I either, remove my short for Tesla or before I add more to TSLY long. So I'm just, look, we were up from 150 in May to 300. So we're up 100% in less than a few months. and that's worrisome. So I just wanted to have a little bit of a short on, even though we pull back, even though this is a good entry point to start nibbling on these Yieldmax funds, I think a short makes sense here. I'm not telling you guys to go short. The only reason why I'm going short is because I've overloaded a little bit in these Yieldmax funds. I mean, not technically overloaded by the weighting that they are in the indexes, but in my account, you know, I have to watch out for the maintenance, and I have to watch out for headline risk, because I like to tie my investments to the indexes. Now, these FANG names, Facebook, Netflix, Amazon, Google, these are the indexes, so I like having them there. But FANG could have a pullback while the rest of the market goes higher. I've seen it happen before. So I want to just make sure that if Fang pulls back, Fang stocks pull back, that I'm protected. I also bought Fang D, okay, Fang D, because a lot of the Yieldmax funds are in Fangu, so I just bought the Fang D inverse short. Okay, so Fang D, that's also what I've done to protect myself. Now, I'm not worried about an overall market correction being down 20%, because if we lose 20% in the market, we break even with most of our portfolio. Cornerstone is 500,000 of our account. This is 250, so 500 there. And Cornerstone has a 20% dividend. So if I'm down 20% in Cornerstone, then I break even for the year, okay? Also, the drips that I get keep me ahead in Cornerstone and keep me ahead of market declines. The $8 market price that you see here, I drip the 21% dividend down at 6 every month. So Cornerstone drips its dividend down at 6. That's a 30% gain. We also had 642 here. If I can show you there. Okay, we're on CRF. Okay, 6. Okay, you see here 6. All these drip shares. 663, 27% gain. 642, 32% gain. 627. Okay, 627. I'm scrolling slowly for you. Okay, I've been getting complaints that I move around too fast on my screen. That's a 35% gain. Okay, 35% gain. Okay, sometimes my screen glitches on its own. So this is how I'm protecting myself on a 20% correction in the market. I'm buying Cornerstone. That's my whole account, and I do it because Cornerstone is a 5-star fund, and it beat the S&P over the last 10 years, as you can see on this chart. So I'm going with Cornerstone and all these other Yieldmax funds. I go with their dividends to protect me from a down market. So again, if we have a 20% correction in Cornerstone, I break even, okay, because my whole account is anchored in Cornerstone. Cornerstone is my account. It is the indexes. So that's why I put so much of my money in Cornerstone, okay, and along with the 21% dividend that it gives you, and that helps you live financially free. You just have to time Cornerstone around its rights offerings. If you need help playing Cornerstone, email me for my e-guides at akintodd48@gmail.com. And I have an alerts channel here for Cornerstone, the Cornerstone RO. This is where we give the announcement for the Cornerstone rights offering. So that's the only thing standing in the way between, you know, slavery, in my opinion, and financial freedom, okay, is the rights offering. Because all my account is in Cornerstone. That's all I care about. These Yieldmax funds, I'm hedged in, and I don't have them as a big enough percentage of my account to matter. OARC is diversified, so I don't mind having 30K in that. APLY, again, I have 20 in it, but I'm still underweight according to what it is in the indexes, and it's very conservative. So I'm anchoring my portfolio with APLY and Cornerstone. And the dividends from these funds, these Yieldmax funds, some of them are in excess of 50%. Well, that gives me 50% downside protection. So I'm not worried about falls in the market, okay? I'm not worried about a 20% drop in the market, because over a year, our dividends in Cornerstone pay that back. Same for these Yieldmax funds. Okay, and if we have a 20% drop in one day or 1 month, well, then I have these short options on here, these put options, QQQ and SPY. I have these put options, which will clean up in the event of a 20% correction in 1 month. So I'm not worried about a 1 month correction with my margin strategy, and I'm not worried about a 20% correction, because we are covered in most of our portfolio with Cornerstone, and then our Yieldmax funds, we have big enough dividends in these to where even if the stocks pull back 30% from these current levels, we're still ahead, because if Tesla pulls back 50%, our 70% dividend means that we're still up 20% for the year. So this yield support is really where I find solace, and I'm able to sleep at night with, knowing that if the market falls a certain amount, my yield support pays that back. And also now I have these hedges on for Yieldmax funds, just in case Fang wants to fall and the rest of the market wants to keep rallying, okay? I think that'll do it for this video. I think we've explored all the hedges that we could. Okay, so I have put options on in case we have an immediate crash in the market. I have these short. I still short Cornerstone, by the way, but that's another video. If you need help on boxing Cornerstone, go check out that video. Boxing Cornerstone raised my equity a bunch, but I don't want to confuse you guys. That's for more advanced strategies there. So I have basically my yield support is my protection in Yieldmax and in Cornerstone. Okay, these dividends are my support, but I now have these hedges in just in case, because we're still at the highs in these Yieldmax funds. They pull back a good amount, but we're still near the highs and we're still way off the lows. So I thought it made sense to add these shorts in here. If we go higher tomorrow and I'm wrong on these shorts, well, then all of our longs will clean up on the other end. Okay, we'll still be making tons of money on the other end. You know, 0.10%, that's a nothing day for me. If we have a 1% up day in the market, that's 7,000 for me, because you have the 5,000 net account value and you have the 200,000. You have the 500,000 net account value and 200,000 in debt. So 700,000 total is about 7,000 on a 1% move in the market. So we're going to follow the market. As long as we follow the market, then we don't care. And we will follow the market because we are indexed. You can't promise correlation with the market when you're in individual stocks, but I tie all my investments to the indexes, which guarantees essentially that I'm going to get the performance. And so I just know that if I have 700,000 invested, then 1% up day, up or down, is a $7,000 move in my account. So we're going to have the power. We're going to have the ability to compound capital gains and really clean up if we're wrong on our shorts and the market goes higher, okay? So again, that'll do it. If you need help with my strategies on living financially free out of my brokerage account, again, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get access to my Discord chat room for free. All those channels that you saw, you get access to for free, as well as my phone number. You get my phone number for free, and you can call me anytime. I'll set you up and walk you through your portfolio and have it look just like mine if you need me to. So hope you enjoyed the video, guys. Click like or subscribe if you did, and I'll talk to you soon. Thanks.